Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1331st edition of Short-Term Trading Live with Oscar. Good evening, traders. Monday evening. This video being filmed early Monday evening for trading Tuesday, June 16th, 2015. Day one of a two-day Fed meeting still leaves us with a red OMNI. The OMNI tells me to stay on the hunt for the downside in the S&P and Nasdaq, and that is what we will do. Traders, I showed you this very same chart in last night's video. Let me just tell you that futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders, shouldn't be traded by anybody according to what I've seen lately with these crazy moves. And make sure that you have risk capital and you are willing to lose it if you're going to play in this arena, because it is a tough arena lately. All right, so at livewithoscar.com, I have a live chat room where I run trades every day, and this I showed you in last night's video. So I showed you in last night's video that the market opened up with a gap and that we never leave gaps in the S&P. Look back, no gaps. It does not happen on the S&P 24-hour chart. And lo and behold, look, the gap I showed you was here, and look what happened. It filled, right? The market opened below this blue line, came down, hit the average, one of my big guns, and ran back up and filled the gap. So you would think, gangbusters, now we can buy it, hooray, right? You would think that. But I'm not so certain. Omni wants me to stay short. Or at least Omni wants us to stay on the short side of this hunt. Hunt S&P and Nasdaq from the short side. Okay. That we will do. This symbol is actually ESU, not ESMU. So let's remove that M. And boom, that's what we have. So Omni wants us to be on the short side again of a rally for Trading Tuesday, and I'm not going to argue with it. But this is the very same chart you seen in last night's video. The blue line represented the gap we opened underneath. It did actually come up and fill that gap. Bravo so far for markets, or for the S&P, that is, filling gaps. Let's go look at the Nasdaq chart we also looked at in last night's video. Nasdaq chart left you with the same thing. I said, you know, this market has no gaps. If you'll look, it has no gaps. Look back here. Gaps, none. But we did open with a gap last night. So I put this there to represent what that gap looked like. And it was a little one, but we had a gap. The market did go back in and fill the gap. So now the gap's full. Interesting that the Omni never really gets violated, or OTAPMA, the Omni Trading Academy's proprietary moving average, almost never gets violated by more than about as much as we got violated on Monday, right? If it does get violated at all, it doesn't go much past about this far. So that looks interesting. Maybe a buy, right? Could that be? Well, I don't know, because sometimes when it does penetrate, it does it for a couple of days, but we've got to look at more evidence here. Let's go look at another chart. This is the Dow Jones Transportation Average, and traders, ever since we have violated this average, but bam, look at what has happened. I mean, this used to be something that you can count on. Had this one violation back here, but then after that violation, it basically was able to stay above the average for a very long time. Stays above, is above, gets below, tries to get back above, and runs into trouble. That's key. Since then, you have put in the Dow Jones Transportation Average, what's considered a head and shoulders right here. You got the shoulder, the head, you've got the right shoulder. That's in. There's no arguing what that is. We fall out of the head and shoulders, and now we've got a bear flag. That is interesting. So now you've got a bear flag sitting here, and that I'm not going to argue with. We'll look at it in two different ways, but that, my friends, happens to be a bear flag. So let's label it. So we give it a name. We call that bear flag, and what happens with a bear flag is generally they go down. They send the market lower. Not 100% of the time, because nothing can work 100% of the time. But the averages are pretty high that the bear flag, in the end, will send the market down, meaning bearish, right? And if we expand on this, look at it like this, it's a bear flag. If we get smaller, let's go the other way and look at it like this. It is a bear flag no matter how we slice this thing, right? It looks like a bear flag that formed after failing at an average and creating a head and shoulders top looking pattern. So you gotta be a little worried about this transportation average at this point. I am. Let's see what's going to happen. Then you've got this one. Dow Jones Industrial Average. Let's look at this pretty monster. Now, generally, this average keeps us in check. Boom, we're in check, we're in check. Even though it went down a little bit, we're in check, we're in check. Here it went down, went back up, came back down pretty rapidly. Last time we had anything that looked like that over here, look what happened next. Ba-boom, ba-boom. I am not calling for anything more than a day's trade, but for a day trade, we are selling rallies in our U.S. indices. Then, let's bring Europe into the mess. You've got the DAX. Look at the DAX. Ever since it got below OTAPMA, first of all, it did well holding above OTAPMA, right? It holds well. It holds well. It holds well. It finally pierces it, makes a bear flag, dumps, rallies up, can't get above it. And if you ask me, we are looking at a pretty solid bear flag right here. Let's look at this thing like this. Here's your German DAX. Bear flag already down under it. Can't get it back above OTAPMA anymore. Seems to be having trouble there. I say we may have a little problem. Now, we are day traders. We are looking to take on a day trade. So, you know, we've got Aunt Janet coming out. Don't forget, we've got Fed meeting day 1 Tuesday, day 2 on Wednesday. So we are only discussing what should happen in the next 24 hours. We're looking for a day trade. We know that usually the Fed sends us higher. I don't know that that's the case this time around. We'll take this one day at a time. But for Tuesday, day 1 of the Fed meeting, and let's just be clear in case no one knows for sure which day I'm discussing. For Tuesday, day 1 of the Fed meeting, we are selling rallies because Omni tells us not to get bullish. So, day 1, selling rallies. The DAX tells you that that's a great idea. The other markets I showed you basically look the same. Let's see what's going to happen. Now, in last night's video, I also offered you a gold trade. So let's go look at where gold is. We don't want to abandon ship on our gold. I mentioned to you that what I would have expected on Monday, which was today, was the gold to gyrate inside of the red flag. And eventually, we would come down, and I showed it to you, and I drew a little green arrow right here in last night's video. And I said that we would eventually come down because that is what bear flags do. We gyrated inside of the flag exactly as expected so far. I am not expecting gold to run away, even if the S&P gets cracked. Eventually, the gold is going to pay the piper. 3 flags in a row. Omni head test, failure. Failure at this average here like it failed here. Eventually, this arrow comes our way in gold. But for the next day and a half until the Fed speaks, we are going to lay off of gold. So until Aunt Janet speaks, until Aunt Janet, as I like to dub her, until my Aunt Janet speaks, we're going to lay off gold for a couple of days, and we'll come revisit it after the Fed meeting. So traders, that's what I'm looking at there. Remember this picture because if anything sums up what's going on right now, if you ask me, this is the picture that sums it all up. Forget about the meeting, forget about the news, forget about any of this stuff. What sums it up right now is the ugliness of this DAX chart. All right, traders, come on down to livewithoscar.com. Make sure you come visit us in our free chat room. That's where I host these live trades. That is where I'm able to show you how we're getting in and out of the Omni positions. And always remember, keep your emotions out of trading. One of the best things you could do with keeping your emotions at bay is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders, and I'll see you all at livewithoscar.com.